Well, I'm delighted today to be speaking to Evonne Tan, who's Managing Director and Head of the Private Bank here at Barclays in Singapore. Welcome, Evonne.
Thanks for inviting me to this video.
So we're going to talk about some of the latest trends from the private wealth market here in Singapore shortly. But before we get into that, it'd be great to hear a little bit more about your professional background.
Sure. Actually, I've been doing this for a very, very, very long time. So I started out in the industry in '93 in the old Union Bank of Switzerland, sort of pre-SBC merger. And I started actually as a foreign exchange dealer. Did that for a few years, moved on to Deutsche, doing the same thing, sort of covering central banks, sovereign wealth funds, hedge funds. And then in 2000, I decided to take a career break, and I took some time off to be with the kids and did all that stay-at-home mom thing. And then after a few years, decided to move back and come back to work, and then pivoted actually into private wealth, right? So at that point in time, my thought process was really that, I wanted to move away from foreign exchange because it was, kind of looking at very commoditized industry, etc. And the private wealth industry in Singapore was just sort of taking off at that point in time. And I looked at wealth management as one where there is, I think, longevity of career, because when I look at a lot of the successful private bankers, none of them are young, right? In fact, the more gray hairs you have, you are more successful. Clients want to talk to you, want to listen to you, seek your advice, etc. So I thought, not a bad career choice. Yeah. And so I did that, and I started out actually wealth management in the US brokerages, so Merrill Lynch, Morgan Stanley, and then I moved on to UBS. So I was there for about 7+ years, and in the last 2 at UBS, I was running the ultra-high Singapore business. And I joined Barclays Singapore last year to essentially set up and head up the Singapore office.
Fantastic. Well, a huge amount of experience there to leverage in many different contexts, so that's great to hear. It'd be interesting to hear a little bit more about the Barclays business here in Singapore. What's the key offering for clients?
Sure. So we just came back last year, so we just reopened the business in sort of July last year. We are a 330-year-old institution, but we are really a new kid on the block. But in Singapore, the Singapore branch, the corporate investment bank, we've actually been in Asia for almost 50 years, right? So we just celebrated our 50th anniversary in Hong Kong this year, and next year we'll be celebrating our 50th anniversary in Singapore. The private bank is actually integrated with the corporate investment bank under BBPLC Singapore branch. And within the private bank, our key focus is really on ultra-high net worth and family offices, mostly single family offices, but also some multis. And our key value proposition to clients is really that we are the leading UK investment bank, but with a global footprint, right? And I guess in terms of positioning here, it is a competitive, market in Singapore. There are many, other banks that have been very established in Singapore. But for us, we really focus upon our differentiation, right? Our niche offering, right? And by that, I'm basically looking at sort of 4 sort of key areas in terms of how we play in this market. So first of all is being a UK bank, obviously our gateway and connectivity into the UK and that UK nexus, right? So we are relevant to clients who have sort of maybe, investments into the UK. We have a lot of Asian family offices and Asian families who are, for example, very interested in UK real estate, for example. So we play that London-Singapore corridor, right? Also interesting for us is actually the London-India corridor, because we have a very large and successful franchise in India. And interestingly, I like that sort of triangle, right, where we have sort of India, Singapore, and London. And a lot of the global Indian families, right, they would have, say, a business in India, a family office in Singapore, and maybe they would have a lifestyle home in London. And because we are global and we have offices in all 3 locations, we're able to help support many of these global families, right? So that's one where, we have that gateway into London, right? And where we can offer clients, who'll be interested to talk to us on that, right? The second one would really be, sort of providing curated access to our clients, to our corporate investment bank, right? And as I mentioned, we are integrated with them, and we basically have we are the leading UK investment bank. We have a, sort of global infrastructure. So I think we'll be able to help bring to clients, access to that. Internally, we call it the Power One Barclays, and essentially that means sort of working collaboratively across businesses and globally to be able to find the right solutions to our clients. So that's the second piece, right, in terms of our value proposition to our clients. The third piece would really be focusing really on differentiating ourselves from differentiated and institutional quality products and solutions. And by that, we have, for example, discretionary solutions that are a bit more institutional quality in nature, so meaning a bit more bottoms-up, concentrated, quite different and unique compared to the rest of the street, right? So that's one. We also have a very unique private markets platform, right, where we actually give access, priority access to our clients around sort of across different sort of investment structures, different types of products in the private market space, and that could be from debt to equity to hybrids to co-investments, etc. Private equity funds, VC funds. So it's a very wide, flexible platform, and I think I would dare say sort of quite unique compared to the rest of the street. So that's the third piece, where we differentiate ourselves. And finally, I would say our focus on sustainability and impact. I think that sort of cuts across everything else, but that's a very core focus for us. Sustainability, I would say, is a core value for the firm. We look to work with a lot of our clients along the sustainability journeys and looking to bring a lot of the products and solutions, whether that be looking at discretionary portfolios, where we have sustainable portfolios, as well as private markets impact investments, right, or investments into innovators of impact.
And what kind of intermediaries do you work with both here in Singapore and overseas?
Actually, we work with a lot of intermediaries, right? I mean, they could be trustees, lawyers, multifamily officers, right, tax consultants, etc. So we do work with quite a few of the intermediaries. I would say both, as you say, in whether it's in London, overseas Geneva, Middle East, and also here in Singapore. So I guess for us, Barclays, I think we talked a lot about that global footprint, right? And that, the global connectivity and the fact that we actually play a lot of the cross-border, business across the corridors. Those intermediaries who are working with global families, right, would find us sort of interesting, right? Because we're able to connect, I guess, with all the offices across the globe, yeah.
One of the big headlines here in the wealth sector is the growth of the family office sector. I mean, perhaps you could tell us a little bit more about how you've seen that develop.
Yeah, there's so much happening in Singapore, right? So I'm just to give you some stats, right? And just to appreciate that tremendous growth we've seen, right? So in 2017, we have roughly about 50 family offices in Singapore, right? And today, if you look at the latest number that's been published, which is end of 2021, that number is 700, right? So that's a tremendous growth over a short period of time, I guess over about 4 years or so, right? And it's interesting that a lot of that growth actually happened during the pandemic, right? The 2021, right? And of course, people are asking, why is that so and all that, right? So I'm just thinking that, being Singaporean, of course, I'll be patriotic, but I think the Singapore government probably did a really good job about how they handled the COVID situation, etc. And so, a lot of, I guess, people looked at Singapore being a safe place to be, right? A safe haven of sorts, right? And I guess from a wealth management and perspective and family office perspective, right? I think Singapore benefits from having a very predictable regulatory environment, a robust legal system, right? We also have, transparency, strong governance, etc. And of course, it helps that we also have a lot of tax incentive schemes that the government, has put out for essentially the 13U, 13O tax incentive schemes for family offices, also the Global Investor Program by the EDB. So all these obviously help, in the growth of the industry. In the old days, I guess, maybe say 10 years ago, Singapore has always been a wealth management hub, right? Family office hub as well. But it was more regional, right? So we had a lot of regional families, say from Indonesia or Thailand, etc. That would have their family office here. But today, I think we are now playing on the global stage, right? We've moved or we've elevated ourselves, I think, the last 3-4 years, where we are seeing now families from all over the world, right? From the US, from Europe, from UK, right? In the Middle East, right? We're seeing a lot more coming into Singapore, right? And I think, that's been quite an interesting development.
Yeah, fascinating. And what of your proposition do you find the family offices are most interested in? I mean, you mentioned before private markets. There are certain elements, perhaps, of the proposition that family offices plug into, do you find, more than others, or it's hard to characterize? No,
I think you're right, right? So I think that's also the way we've been sort of positioning ourselves a little bit, because when we look at developing our offering, we are also looking at, it's also about client demand, right? What are clients looking for? What are clients interested in, right? And that's the reason why you see the way we've developed our offering was, number one, global, right? Because a lot of families today are investing globally. A lot of families today have, say, family members that are living in different parts of the world, right? So you have that. And then also a lot of clients, because when they set up a family office, they're also getting more institutional. So they may be hiring, say, ex-professional, an ex-banker from a private equity firm, etc. So they're getting more institutional. So the way you would want to maybe service them, or the offering will have to also move to become more institutional as well, right? And then finally, of course, we are seeing a lot of interest into private markets, as you say. So the allocations have been increasing through the years, right? It used to be everyone say alternatives 5-10%. But today, we're not, it's not surprising to see 30-35%. It's also not surprising to see family offices set up just 100% investing into private markets, right? So we're seeing a lot of that trend. And finally, also on sustainability, right? Because a lot of the wealth, after the sort of looking at wealth generation, the wealth transfer, intergenerational wealth transfer that's been happening sort of in the last sort of 5 years or 5 to 10 years or so, we're seeing the next gens coming in, right? And the next gens, I guess, in that sense, are also very interested in impact and sustainability, and also using the family office to kind of like almost like a shared common ground, right, across the family, different generations of the family, right, to bind them together as well. So that's been a bit of that. So you can see the way we sort of, I guess, curated our offering was really very, sort of targeted at the family office and looking at what are they looking for, what's the demand that's, we are seeing in terms of trends, and trying to capture that, I guess.
Okay, thank you. And on that global viewpoint, I mean, the UK, we mentioned, London real estate is a feature of the private wealth market here.
Yes.
Do you still see strong demand for luxury real estate from Asian high net worth families?
So that's an interesting one, because of course, number one, actually Asian families have always been interested in UK, or maybe globally, it's right. UK, I think, has always had that appeal, because I guess through various market cycles, have always held its value. And so today, I mean, we are still seeing, in fact, we're quite busy because we're seeing a lot of clients interested to look at the UK. So I think it's interesting now because there's a lot happening in the UK. It's a bit volatile. Inflation rates are rising, etc. But pound is also very cheap, right? So what we are seeing is that a lot of Asian investors are also very opportunistic, right? And so in fact, they're looking at this as perhaps an opportunity, right? So they are looking, and we are seeing a lot of clients interested to look at it. Of course, because mortgage rates are rising, and you can have different viewpoints around what's going to happen to property values. Perhaps, the way I'm looking at it is perhaps next year, if mortgage rates rise and, a lot of, I guess homeowners feel the pain, right? And we may see maybe the market sort of, coming up a little bit next year. So I think a lot of investors are looking ahead to see that, okay, perhaps next year will be a good or interesting opportunity. And recently I saw a Knight Frank report, right, that sort of looked at the comparison between sort of 2014 property values and today, right? So that's about an 8-year period. And I think they looked at a combination of property prices as well as the effect of the pound sterling, right? And the combination of those. So for a dollar-based investor, depending, of course, which region, which part of, London, etc., or UK that you want to buy into, it's anywhere between sort of 30 to 50% lower today than 2014, right? So I think a lot of Asian investors are looking at this and thinking it's quite interesting, right? People are not necessarily, I guess, pulling the trigger today, although we are, in fact, working on some, mortgage financing as well today. So yeah, it's an interesting time.
So is this just a London play, or do you see clients looking outside of London as well to cities like Manchester or further afield in your experience?
Yeah. It depends on whether the investor is a new investor or an older investor, right? So I would say UK in general as a investment destination for real estate, a lot of Asian investors have been going to UK for a long time, actually, right? So if you're a new investor, typically, if you want to go to any country overseas, you would always just go with the larger city, and obviously London's always been there, right? So I think London's always going to be the core. But we are seeing the older investors, meaning those who have been investing in UK for some time already, and they are now, they're maybe smarter, looking for value outside of London. So they've been going to some of the other cities. So yes, we are seeing a bit of that, but I guess it would always be still sort of more focused on London. Yeah.
On a global perspective, the US equity market is always popular for international investors. Do you see the US market being an interesting place for clients here to be investing as well?
Yeah. Actually, in fact, I find that the largest investment allocation from Asian investors is actually still the US in terms of the equity markets, right? I mean, it is the largest market globally, and I think Asian investors are sophisticated. And they look at asset allocation, etc. So they know this. So I think they've always been invested into the US markets. Of course, it has been IT play, it has been various others as well. So yeah, the short answer is yes, right? They've always been interested in that. But the other one we've been seeing also is a lot of clients are also interested in now. As you mentioned, we talked about the allocation into private markets. So there's a lot of PE, VC funds, and these could be sort of large buyouts. It could be sort of mid-market direct lending opportunities, etc. A lot of them have feeder fund structures that, sort of distributed into the Asian client base, right? And so we have a lot of clients who are also invested into the PE VC space, right? That are obviously US based and investing into the US. Yeah.
Okay, and you mentioned before the next gen clients, the great wealth transfer. Do you see next gen clients having different priorities to the previous generation?
Definitely different priorities, right? I mean, end of the day, different life cycle, right? Different, I guess, environment in terms of how they grow up, right? So definitely different objectives, different ways of thinking, different risk profile, right? So I guess the question is a bit more of, how do they then sort of, I guess, align themselves with the previous generation, right? And that's why we talked a little bit earlier about that's the way I see it is about using that family office structure and how that's kind of important, because I think that central structure, whether that's hardware or software, and hardware meaning asset holding structure, legal entity, etc., and software meaning sort of governance frameworks, right? Looking at constitution, etc. That's really important, and how you can use that central structure to then sort of bind the families or bind the different multi generations together, right? And then sort of using that to then perhaps align the priorities, because everyone's going to have different priorities and maybe different ways of investing, right? But using that family office, you can still maybe have the older generation still have some control or oversight, but yet you may say, okay, I'll have a pocket of funds that you may look to do something along those lines. Along your sort of own objectives. But also I think the thematic of sustainability and impact we've seen has been quite I would find a common ground to basically bind the different generations together. I think the sustainability topic is probably something that every generation would be, is of shared value, right, that they would focus on. Of course, the difference is that the older generation will be looking at sustainability as sort of succession planning. Right? How do we, that's sustainability, right? How do we ensure that the core business or the family, continues for many generations, right? Maybe the newer generation will be looking at sustainability around, okay, I'm very interested in impact investing, right? And how do I look at impact investing? In fact, a lot of the new generation is actually leading the way, right, for the family. But I guess using that thematic, you are able to for the family to come around a sort of shared common goal, right, to help effective succession, right? So I think. Yes, we are seeing different priorities, but I think a lot of families are now looking at, sort of setting up structures to be able to help sort of bind the family together, right? And I think that, that's kind of a bit of the trend that I've seen.
And that's, I guess, a key opportunity of partnership between other intermediaries to set the legal structure to define the objectives. But I guess as a banker, you might take the lead to actually propose the family has that conversation, isn't it? Which can be difficult around succession planning, the timing of when to perhaps step back, when to put wealth into a structure is difficult, isn't it? Challenging.
Yeah, I guess our role as banker, because we will we will have a lot of different conversations with the client around many different topics, right? And it could be, as you say, around maybe the family, around the business, sort of investments, around sort of what's for the family, what's for themselves. So there's a lot of different conversations, and you're right that sometimes it can go in many different ways, but you still need a professional, right, who specializes in it, whether it's a lawyer, whatever, that can look into, as you say, putting together the hardware as well as the software, right? But it's a matter of the timing, right? When's the trigger point, right? And for us, because we have those conversations, and when we think, we can talk to them, and when we feel that there is something where there is a need, there's a want, there's a desire to maybe do something, like maybe they have a problem, they're sharing something along those lines. And then we can then say, okay, maybe that's a good timing, and thinking through that this is the timing where, you may want to bring a professional in, right? Because sometimes it's very hard to bring a professional in from day one. Sometimes it is, but sometimes it's not, right? Because they have to be ready. Because you can talk and then it will just be, okay, I know what I need to do, etc. But it's all sort of more technical. It's because a lot of these things is actually very personal, right? It's emotional, it's family matters, etc. So it has to come to a point where they're ready. And sometimes it's a life event that triggers, right? It could be sometimes, maybe a death in the family or something where they think, I think I need to think through this, right? Or maybe there's an argument, something along those lines, right? And so for us as bankers, because we have that day-to-day, we understand the family. And when we think the timing is right, of course, we would, broach the subject, and then we would bring the professional into the picture, right? Because, that's their role and their job, yeah.
And do you find also pure philanthropy comes into that conversation as well? Because you talk about impact, which is more investing for good, isn't it? But still focusing on getting a return. But are you also seeing families carving up a pool of assets for purely philanthropic purposes?
Yeah. Definitely, but I would say that different families are different. It's very individual, right? And there's no real there's no one cookie cutter, one way of doing things, right? And so, in certain families, when they're looking to give back, to do good, right? It could be along the lines of, as you say, a more philanthropic sort of a foundation or, that kind of thing. And I think it tends to be, in my view, the older generation tends to be thinking more along those kind of lines, right? And then, and for some families, they prefer to give back in, say, investing into impact, where investing into companies that are doing some social, environmental good, but yet I'm getting some financial return. Or it could be in other families, sort of a bit of asset allocation into different parts, right? So I would say there's no one size fits all. It's really very individual. And I guess our job as well is to try and help them along the journey, right? Along the sustainability journey. And we do a lot of work around sort of education as well, talking to clients about, what they should be, trying to help them, I guess, together as partners, try to help them identify, what the objectives are, what the sustainability objectives are, how do they want to achieve what they want to achieve, right? And then sort of coming up with a plan around that, right? And then, of course, how to implement and execute, right? So we do sort of do a bit of that work, working together with clients around that. And I think that's an important sort of first step and foundation. But I guess I would say that, different families are quite different. There is no one sort of typical family office, to be very honest, right? It's quite individual as well.
And finally, Evonne, what do you see as the key concerns of clients at the moment?
Actually, everything today, right? Everything, because there's too much happening in the world today. I think specifically around investments, I guess, we're looking at rising rate environment, but we're looking at inflation, we're looking at the war, geopolitical tensions, and that leading sort of questions around energy security, food security, et cetera, et cetera. So there's a lot going on in clients' minds. And I think part of the issue is really that we have just been in this Goldilocks era for just way, way too long, right? Low interest rate environment. In Europe, we had negative interest rates as well, right? But if you think back historically, that is actually an anomaly. It is an anomaly, right? We're sort of probably not looking to normalize, right, today. But we've just gotten used to it, right? We've just gotten used to it. We've gotten used to buying on dips. We've gotten used to, we've just gotten used to that. And I think because a lot of it has happened in a very compressed period of time. So this transition is definitely unsettling. We're seeing the big unwind. We're seeing a repricing of risk, right? And I think clients are now sort of grappling with that. And of course, if they have investment portfolios before, obviously it's not doing well this year, etc., right? And I think the concerns would be around what's next, like, what's going on. And, I think it's a new paradigm shift. And I think clients need to really think about restructuring, I guess, right, for the new paradigm, right? Because I think in the old days, in the last sort of maybe 10 years or so, where, whenever, they use the same strategy, right? The strategy is not changed, right? It's just, buy on dips, we just allocate again, et cetera, et cetera. But today, I think you need to sit down and really think about, with a new inflationary environment in the future, with geopolitical tensions, are we looking at sort of deglobalization, right? What does that mean? Are there issues around energy security, food security? How are you going to invest for that, right? So I think you need to kind of rethink, because I do think that we have moved on to a new paradigm, and so you need to re-look at how you are I guess structuring yourselves to capture not just capturing opportunity, but also sort of preserving for the future as well. Yeah.
It's a critical time for clients to evaluate how they're positioned and for intermediaries to work with the right partners to get the right result for clients.
Yes.
So wonderful to talk to you today, Evonne. Really enjoyed our conversation. We look forward to sharing this interview. Thank you.
Thank you. Thank you.
The latest technical content delivered through global conversations with professionals for professionals.